Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, here with my wonderful co-host, the TIE's Director of Content, Lawrence Lewitton. Happy Monday, Lawrence.
Happy Monday. Who's this wonderful co-host you talk about? I don't see.
I know. A surprise,
Emily's not here. Emily's not here.
I know, but Lawrence, I tell you every Monday morning, I miss you dearly on the weekends.
Well, thank you.
You're
you.
welcome.
Yeah, somebody I'm going to miss dearly, of course, is we're down one viewer, but we'll get to that with Nick.
That one viewer is off to jail, but we'll get to that in a little bit. Let's take a look at what's happening in the markets this morning. A whole lot of nothing. The CoinDesk Bitcoin price, XBX index, is currently at 29,382. Not doing much this Monday morning. Let's see if Ether is following suit. I predict it is. The CoinDesk Ether price, ETX index at 1,844, looking very similar to Bitcoin. And the DeFi index, the DFX, is at 123, up just over 2%. All right,
let's call it 124.
Okay, you call it 124.
It's 124. It looks like 124 to me. I know it's 0.99, but come on, 124.
That's why we have That's why we have you here, Lawrence. When I missed that 0.99 and round down, you keep me right. Okay, let's talk about our top story today. FTX founder Sam Bankman-Fried was sent to jail on Friday. This is now ahead of his October trial after a federal judge revoked his bond. We're going to talk to Nick Day about this, CoinDesk Global Policy and Regulation Managing Editor, who's also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Hey, good morning. Happy Monday.
Happy Monday. Happy Monday. Now, I'm sure it was a very busy weekend for you after we learned that Sam Bankman-Fried is going back to jail on Friday. Talk to us about what was going on in that courtroom. Paint a picture. What happened on Friday?
Yeah, so Friday, with his parents in the audience, Sam Bankman-Fried learned that, after a hour and a half or so hearing, he would be remanded to jail until the trial, and whatever preparation he's going to have to do, whatever plans he might have had, he will now have to do so behind bars. The judge, basically was not having it with his defense team's arguments after he allegedly leaked Carolyn Ellison, the former Alameda Research CEO, and his ex-girlfriend's private diary to the New York Times, saying that there were no set of conditions that might keep him from being a danger to the public, and therefore he's getting remanded immediately.
He must have known. What did his face look like? I mean, did you get to see his reactions on any of this, or you just saw the back of his head?
Well, I was sitting behind him. After the judge read out his verdict, he, looked down for a while. You could tell that his family, his parents in particular, seemed pretty upset, as I would imagine any parent would be. For the first several, long seconds after the judge read the verdict, Sam Bankman-Fried was just looking down. Eventually, he looked up as his attorneys said that they plan to file an appeal, and B, motion to stay the detention order until that appeal was heard. That stay was denied immediately after a very brief 30-second back and forth between the defense attorneys and the prosecution. After that, it was pretty straightforward. The marshals in the audience right behind him asked him to take off his jacket, I think unbutton his cufflinks, and then they handcuffed him and escorted him out.
Yeah, and I'm sure that must have felt humiliating, taking out, definitely when you have to take off your belt buckle, and that's probably the worst part of the getting arrested. But that's a different story. Do you get the sense though that his defense attorneys? I mean, did you notice any interactions with them? I mean, obviously this has been some time now, a few days, but I mean, clearly this was. Leaking those diaries probably wasn't something they had on their list of to-do things for Sam, was it?
Yeah, and while I haven't spoken to Sam's own attorneys about this, I have spoken to other former prosecutors and lawyers who say that part of the challenge for a defense attorney is controlling their client. And this is one of those cases where it does not appear that happened. And so, I think you could tell right from the outset of the hearing that the vibe was kind of, everyone was expecting him to go to jail. No one was expecting anything else. You had extra marshals in the courtroom than, more than you usually did. You had several with handcuffs and, all the gear walking in right at the beginning, sitting down in the front immediately behind Bankman-Fried and his defense team. This is one of those things where every moment felt like an inevitability. There was no situation where he was going to walk free, it seemed. And that's what we saw play out.
What's the likelihood of an appeal here? It's August now. The trial's supposed to start in October. What's the likelihood he gets out of jail before that October trial?
I think that's going to be up to the appeal court. The appeal has been filed. It was filed on Friday itself. So, the circuit, I believe it's the Second Circuit Court of Appeals has that. But it'll be up to them to decide, A, whether they want to take it, B, if they want to hold a hearing on that, and see what that timing looks like. But as you said, it's only 2 months. It's a very brief amount of time. And this is a detention hearing for a judge who, at least in his words, doesn't get overturned on appeal that often. So, I think there's a possibility we'll see, more documents in consideration of this, but it seems unlikely he's going to get out in, the immediate future.
He's over in Boerum Hill. I mean, it's pretty, the rent there is pretty high. So, at least he's got cheap rent.
Nick?
Free to him.
I got to ask you, did the judge sound annoyed at all that this was happening, that there's so much back and forth over what Sam Bankman-Fried is doing on social media and that, there had to continuously be amendments to the bail conditions?
I don't know if annoyed's the right word for it. He was very deliberate about how he spoke. The actual order in which he revoked Bankman-Fried's bail, he gave it verbally. It was, I think, at least 20 minutes, and it was just him going through, every piece of evidence and argument that he was considering. So he walked through, for example, the prosecution's assertion that he reached out to the former FTX U.S. General Counsel Ryan Miller, possibly current general counsel, I'm not sure. But he reached out to Ryan Miller. He walked through both the prosecution's arguments as well as the defense's arguments about that. And in his view, debunked the defense arguments over that particular, contact. He walked through the leaking of the diary. He even walked through the VPN usage that Sam Bankman-Fried did and saying that, while in and of itself, that's not necessarily innocuous, it does speak to Bankman-Fried's mindset of how he's approaching this trial and, saying that he's willing to walk, across the line to try and find out where that line is. And he's willing to do that repeatedly. Basically saying, in many words, that he does believe that Bankman-Fried is not just kind of, merely accidentally stepping across, doing things that aren't, he's not supposed to, but that he's deliberately probing to see how far he can go, how much he can get away with. Wow. He was very deliberate about that. It wasn't, his tone was measured. It wasn't annoyed. It wasn't, exasperated. It was just, here are the facts, and here's my decision.
So what he's basically saying is, gee, I'm shocked that the guy who ran FTX, thinks he knows everything about everything still.
Yeah, I think you can definitely make that interpretation from what happened on Friday. And if you read the transcript, which I imagine will be out soon, and we'll have more about that this week. But he's definitely. I think he lost his patience for sure. Again, remember the last hearing that we saw the judge warn Bankman-Fried at the very end that he has to take all these proceedings seriously. It's clearly something that he still believes, and he's not sure Bankman-Fried will.
Hubris. That's the term. Yeah. Hubris.
All right, Nick. We're going to leave it there. Thanks for joining the show this morning and great reporting.
Thank you.
That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, more legal analysis of Sam Bankman-Fried being jailed ahead of his trial. Joining us now is Hermine Wong. She is the former head of policy at Coinbase and current principal at herminewong.xyz. Welcome to the show, Hermine.
Hi, thanks for having me, Jen. It's good to meet you, Lawrence.
Hi, hello.
Yeah, wonderful to see you again. Just right off the top, got to get your reaction to what went down on Friday. We heard Nick kind of tell us what happened in the court. From your perspective, were you expecting to see Sam Bankman-Fried jailed?
100%, yes. I think the general public thought that too. I love being able to follow Nick's analysis because I was pouring through all the documents myself, trying to find the transcript. So being able to hear it fresh from him about how things went down in the courtroom was super helpful.
When you were in the services of Coinbase, and you guys were kind of like looking at competitors, did you kind of ever think you'd see a competitor not follow legal advice or sanity quite this way? I mean, like, what's the perspective, looking out? I'm not asking you about it internally at Coinbase, but just looking out at the competitive landscape. Do you guys go, yeah, these guys know what they're doing, these guys don't know what they're doing?
Yeah, when you're doing some sort of peer benchmarking, and I think that this is true regardless of which industry you're in, you have to assume rational actors. And I don't think that we're going to pretend here that Sam Bankman-Fried is acting in a manner that the general public or anyone would consider to be rational, right? Like leaking the diary entries, just doing something so out of ordinary to such that you would get your bail revoked, and your bail was set at $250 million. That is not something that I think anyone would have predicted, including his own lawyers.
I got to ask you about this gag order. Some news outlets filed letters with the court about their First Amendment rights and SBF's gag order. Tell us about what this means for all of these media outlets.
Yeah, so a gag order generally is meant to protect the jury proceedings, protect the trial, ensure a fair trial. The gag order that came down from the judge was fairly broad, and the news outlets, especially the New York Times, was the one who filed the first letter saying, hey, this is a violation of our First Amendment rights. We've got a defendant who wants to talk to us, and everything that he says is of public interest. First Amendment and gag orders are really a balance, right? Where you're going to have a balance of what's in the public interest. And you've got two different public interests. You've got the First Amendment and you've got the jury trial and the fair trial. So in this case, I think that, as we heard Nick say earlier, the appeal was filed. We're going to see whether or not the Second Circuit takes this up. But it's generally on an abuse of discretion. And I think that that's why we saw the judge run through all the elements and all the evidence that he considered in his own gag order and the revoking of the bail, to give people notice that this is not something that he took lightly. There was a lot there to the balancing of the interests. And so I don't think that this will be necessarily a precedent setting, new law being broken here. This is probably very much in line with what we would expect.
One thing that's, stepping back a bit too, and we talked about the competitive landscape, but when we look at how the public perceives, some of the most prominent people in crypto, be it Sam Bankman-Fried, Alex Mashinsky, Do Kwon, et cetera, they only see the headlines not of successful people doing good, but successful people doing bad. And at what point does this hurt? Has it hurt the long-term prospects of adoption for crypto when people who haven't quite made that leap over to crypto yet, either trading or using it on a day-to-day basis, they see headline after headline of people stealing it or headline after headline of hacks? What is the long-term effect of a trial like this going to have on crypto adoption?
That's a great question, and I think that it is still up in the air. If we think about crypto adoption as being one where we're trying to really leap into the utility phase and get to the Web3 landscape, this is going to be tough, and we're not getting the right headlines right now. You want to have the combination of crypto winter where you're getting real things that are being built with an eye towards utility, breaking through some of this noise. And if possible, I think it's super important for people who are looking at this case, looking at the other cases that you've named, like the Terraform case, to think like there's a element of fraud, and the fraud is unique in that it's unique to that person and not to the industry. And the more that comes out of utility and a population that is actually using crypto, that will help to balance the fraudulent narrative. Because at the end of the day, we all know fraud exists regardless of which industry you're in, right? We've seen headlines in accounting, we've seen headlines in oil. So that's not going to change. The question is whether or not you can get to break through the noise.
I had this debate with somebody who's in this industry, and he said, look, this is just like the early days of the internet, so you had these problems. And my response is, but the difference is that people were on the internet using, and they adopted it because they saw instantaneously the advantages of using the internet, of buying things, talking to people, sending email, etc. That's not the case here with crypto, though, because there aren't enough use cases for adoption. We haven't seen people going in. Alice hasn't gone to the coffee shop to buy something from Bob, and that's not happening yet. And so does this like make it all the more harder? And it's actually a higher hurdle than it is elsewhere because we've got the fraud ahead of the benefits.
So I think the internet corollary is a useful one, because we might remember that back in the early days of the internet, the internet got governed by something called the Communications and Decency Act, right? In the very beginning, most people were most concerned about the internet being a place for porn and a bunch of illicit activity, and Congress ended up calling the act that did govern it to be one about exactly that area. I have a kid that's screaming for me, so if he comes by, like, please forgive me. And so the other thing is to keep in mind is that the difference between crypto and the internet was that the internet was really going to be created by a bunch of centralized entities. And that makes sense to us. Come on over, Lincoln. That makes sense to us now, why that's very different and why you are able to maintain kind of mission alignment, whereas crypto is one that is going to be very different because we want some sort of decentralized way of implementing. That takes a little while to get right.
If it makes you feel any better, crying babies is a constant theme in crypto, so it's all right.
All right, Hermine, we are going to let you tend to your son in just a moment. The last thing I want to ask you is, what does this mean for SBF's bond? Is he losing the bond? What does it mean for his parents and those close family friends who put up for this $250 million?
Yeah, a great $250 million question, right? So the answer is that he did go to jail. So the bond is in place to make sure that he doesn't flee. And he did not flee. He gave himself up. He didn't, as I understood from some news reports, he barely had time to even say goodbye. So the marshals took him away. So they are not going to take $250 million away from the Bankman-Fried family.
Now, while your son is still there, tell us now, if God forbid he ever did something like Sam Bankman-Fried, would you put up a $250 million bond?
I mean, that's crushing. That is the most crushing thing about this, right? Is how do these parents deal with it on a day-to-day basis? I think you even mentioned, you mentioned some of the human moments of like going to jail and having to take off your belt buckle. These are like very, very difficult circumstances for the individual, but also everyone who's affected. So let's just hope that this kid does not have, he's like staring into the camera, that he does not have these same kinds of instincts of defrauding billions of dollars.
Listen to mommy there, Lincoln. Okay, listen to mommy. Listen to mommy now. Save you a lot of money later.
All right, Hermine and Lincoln, we are going to have to leave it there. Thanks so much for joining the show this morning.
He's already falling asleep.
Thank you for having both of us.
That was Hermine Wong.
We'll interview him.
Yeah, we'll have to get a kids segment going on First Mover one day. That was Hermine Wong, former head of policy at Coinbase and current principal at herminewong.xyz. Coming up, we are going to speak to the founder of MakerDAO and his push to enhance DAO governance right after this break. Good morning and welcome back to First Mover. Our next guest is looking to enhance DAO governance and improve voter participation. Joining us now to discuss is MakerDAO founder Rune Christensen. Welcome back to the show, Rune.
Thanks for having me.
All right. We're talking about improving DAO governance and voter participation. I think this is the number one thing on the minds of anyone who is working on DAOs, who's building a DAO. Talk to us about some of the core problems that are facing DAOs right now that you think that you maybe have a voice in solving.
Yeah, in Maker, the biggest problem we always had with governance was accessibility. Any DAO is basically trying to do something brand new, right? That's never been done before. And today it can be very hard for people from the outside to come and, sort of embed themselves in that, participate in that. So with Endgame, as we called it, because it's supposed to be the final overhaul that sets Maker up for the long run. What we're trying to do is just make it a lot more easy for people to participate without having to, go full time, but rather to sort of have fun, just be a user, participate a little bit, but still be able to meaningfully impact the system. And this way actually tap into this unique power that exists in blockchain and in crypto, right? The power of community, the power of permissionless collaboration and permissionless innovation.
Okay, can you spell that out? Because it's very lofty, but what makes it different than everything else?
So I think, probably the biggest difference is that we have Maker, we work very slowly and methodically. So what we have done is Maker has existed for 8 years now, right? And we've been dealing with these issues longer than most other projects have existed. So we have tried to really deconstruct all the different innovations that we've seen in DeFi, like what we've seen in DeFi Summer, and all the different projects that have popped up, see their successes and their failures, and then ultimately stitched it together to this endgame overhaul that ultimately, the number one biggest innovation that we're introducing is that we want to basically segregate the complexity of system into these new sub-DAOs, as they're called, which are basically sort of sub-communities of Maker that each have their own token, and then they allow for much easier access by users. And also they allow for much more focus in governance. So it gets simpler and you get sort of straight to the action of what you want to participate in.
Hey, can you provide can you provide an example of how that would work?
Yeah, so, one example is Spark DAO, which is Spark Protocol. So that is a new protocol that Maker recently developed and released. And this protocol is basically sort of innovating on top of our original crypto lending business, crypto borrowing, collateralized borrowing business. And so what's unique about Spark Protocol is that it will not be operated by the core MakerDAO. It takes a lot of effort. It takes a lot of specialized knowledge to correctly operate and risk manage a crypto collateralized platform. So instead, it's much more suited to put that into a sub-DAO and then have users who specifically want to do that, right? Specifically, they want to hold governance tokens related to crypto collateralized borrowing and vote for that and, brainstorm different ideas, think about how to reach end users so they can specialize on that particular focus in their community. And then you might have a different community. Maybe they don't think this is interesting at all. Maybe what this other community wants to do is they want to focus on real assets, right? So they want to allocate into treasuries. They want to, do private credit or trade finance. And this is another area that takes a complete different set of specialized knowledge. If you had to ask a random person to learn how to do both and get sort of deeply embedded in both, then it's just very difficult, right? It's overwhelming, especially if it's stuff that you're not interested in. So with sub-DAOs, we try to make it more like a game where you kind of pick what you want to do, right? And then you can just focus on that, and that makes it more fun.
Why not just have separate DAOs?
Well, that is essentially what we're doing, right? There are sub-DAOs, so they have separate tokens. They have separate brands, right? So like Spark is an example of a new brand that's being developed for the purpose of having this separate sub-DAO. But there are of course also still very important things where you have economies of scale, where you have network effects, where you have good reasons to basically band together and scale as a large ecosystem. And more than anything else, the number one thing where this really has an impact is just the raw and the core liquidity of the DAI stablecoin itself, right? So all of the sub-DAOs, they basically share this ability to tap into the economic strength of DAI and allocate that in different ways, right? So they can allocate it to crypto collateralized lending or real assets. Maybe some will focus on real assets in Asia, while others will focus on real assets in the West. But ultimately, it's the same, scaled up economic platform that they are basically applying in these more specialized ways. So you kind of get the best of both worlds, right? You get the flexibility of an individual, small and flexible community where people are aligned, but you also still share this large, old, secure and tested platform and the economies of scale and network effects that come with it.
Now, I know that it's not new knowledge that there's been some back and forth between MakerDAO and A16Z. We had the VC firm months ago say that, this progressive decentralization through sub-DAOs maybe should slow down a little bit. MakerDAO is sufficiently decentralized. Thinking about those comments now, how would you advise other people who are building DAOs to think about this solution that you're proposing? Let's start there. I don't want to make it too complicated.
Yeah, so I think that we have actually seen already a number of projects taking an approach somewhat like this. I mean, one example is synthetics, for instance. That was actually an inspiration for us because they sort of took a lot of the complexity in their business and split it up into new, what I would call sub-DAOs, although they function slightly differently. And it's also, there's been other examples of communities taking similar strategies. And generally, also when I talk to other projects, talk to other founders, many times they will say, "Yeah, we're trying something similar because this is what we think works." Like, I actually think that fundamentally, this is probably the best solution available if you want to avoid being stuck with a centralized hierarchy forever. If you really want to try to make a system where you can have a large community running the DAO in a flat structure, I don't think you can get around having something like sub-DAOs where you kind of you sort of have to compartmentalize part of the decision-making ability and wrap it in its own kind of responsibility and accountability through, something like a token, something that means that if a particular, segment of the DAO makes a bad decision, they have to suffer a greater, negative consequence for that bad decision. And if they make a good decision and they generate some good results, they should be able to get a better upside to that. Because if you don't have this, then as the DAO grows just really, really, really big, eventually everybody just gets, indifferent and sort of disconnected from the results of the actions, because they're just kind of, throwing stones in the ocean, kind of, right? They're not really gonna see that impact on themselves, whether they do a good job or a bad job, and then you get kind of a negative spiral over time, right? A bad feedback loop. So sub-DAOs kind of fix this by making it a lot more accessible for you to directly kind of be exposed to what you're governing and what you're participating in and what you're evangelizing, and bringing people closer to that and closer to the DAO.
All right, Rune. And in June, MakerDAO paved the way to purchase up to an additional $1.28 billion in U.S. government bonds by crypto asset manager Block Tower Capital. What's the status of this? Any updates for us?
Yeah, so Block Tower's structure called Andromeda, which is basically a trust set up so that Maker can interact with the real world through it. Has been, it was onboarded a couple of weeks ago and it's been ramping up, and I think right now it's at about 600 million in active deployed real assets. And I think, this is having this ability to really scale up our exposure to real assets in a way that is very secure and well designed. That's a key reason why now now we're sort of complete in I would say sort of shoring up the back end of the system so that we're ready to really scale. So the next thing we're looking for is things like setting a DAI savings rate that makes it more attractive for users to use the system. And then also getting into releasing the sub-DAOs as a part of the endgame plan so people can farm the sub-DAO tokens. And this way we can also attract more users, because as we attract these new users, we have really, really strong scalable ways to deploy the collateral and the assets of the protocol into high quality real assets.
All right, Rune, thank you very much for joining the show this morning. It was wonderful seeing you again.
Thanks.
That was MakerDAO founder Rune Christensen. We're going to take a short break. When we come back, we'll take a closer look at Bitcoin and the rest of the crypto markets after a relatively uneventful weekend. Stick around.
Bitcoin and Ether are trading pretty flat after a relatively uneventful weekend for crypto. Joining us now to discuss is Ethena's head of research and data, Conor Ryder. Welcome, Conor.
Hey, Lawrence. Thanks for having me.
Glad to have you on. So we haven't seen much movement in the majors, ETH and Bitcoin. You see a potential here for the alts. Are we seeing that necessarily in market dominance? What's going on for the alts, the likes of Shiba Inu, some of these more volatile meme coins, things like that?
Yeah, well, look, we're seeing kind of open interest rise for Shiba. We're seeing a bit of interest start to pick up. But as far as altcoins are concerned, really, I think if we're going to see any movement in altcoins, we really need to see a Bitcoin or Ethereum-led rally to start with. And I think we're a while away from that. Obviously, there's a lot of altcoins that kind of have securities, regulatory risk overhanging them. But yeah, as I said, we're going to need to kind of see a Bitcoin or Ethereum price move, which we just haven't had over the last 2 or 3 weeks. There's actually been a remarkable lack of volatility really in markets, which is pretty crazy for crypto assets, to be honest. But I think what we're seeing is kind of investor apathy starting to seep into markets right now. Investors are kind of looking around for that next catalyst, whatever that may be. Otherwise, they're kind of keeping their money on the sidelines. We're seeing that just in like retail volumes. In July was the lowest in terms of monthly volume we've seen since November 2020. Last Friday, in fact, was a low for Bitcoin volume this year, daily volume. So yeah, we're kind of seeing that apathy seep into markets right now. And there's a handful of catalysts that could lift us out of this, but otherwise we're expecting, I guess, more subdued markets in the near term until one of those catalysts hits.
So some of the catalysts, we keep talking about a potential Bitcoin ETF. We're a few weeks away from knowing whether or not that will happen. But we're also seeing in the process the adoption of stablecoins by PayPal. Are those two things that can coexist, or does one kind of take the thunder from the other? In other words, if we see PayPal adopt stablecoins, does that sort of take away this interest and excitement around a cryptocurrency that can be used across borders? I mean, here you have PayPal that would create basically sponsor a stablecoin that could be used across borders. I guess the question is, does the PayPal news offset actually the ETF news? Does it actually have a little bit of an injury to it rather than a help?
I don't think so. I think the two can coexist pretty easily, and basically because I think they target two different sectors of really crypto markets. If we take the PayPal first, that I think is really great for like retail adoption, right? That's been talked about obviously ad nauseum for the last few days, but PayPal have over 400 million users. All those users are getting onboarded into Ethereum, right? It's tough to remember a bigger kind of onboarding moment for crypto. And if you were to ask for like a Web2 centralized issuer that would back a stablecoin and put their name behind one, PayPal's arguably one of the better ones to do. They obviously, payments is their bread and butter. Stablecoins have long had issues with having access to kind of payment rails, right? So usually stablecoins in crypto are kind of used for buying other crypto assets on exchanges. Whereas now we're actually seeing a new kind of market being opened for stablecoins as payments, right? So if you take eBay, for example, 70% of eBay transactions use PayPal. So now all of a sudden you've got about 70% of eBay transactions have the option to use stablecoins. So that's, and then obviously you have the on and off ramp capabilities of PayPal. Crypto has also long struggled, and especially lately with fiat on and off ramps. We've seen particularly some US exchanges struggle to kind of, and we've seen them temporarily suspend USD deposits and withdrawals. Now this hopefully solves a large portion of those issues. So that's the kind of PayPal side of things, and that's really great for retail adoption. I have other views on whether or not the stablecoin actually moves the needle itself in terms of kind of centralization worries. But then if you take the spot ETF, that's kind of targeting a whole other sector of the market. In my opinion, really it's targeting investment funds, institutions that currently, so basically what we have now is futures ETFs, and futures ETFs essentially is a good way to kind of light your money on fire in terms of paying fees to middlemen. The average kind of, essentially when you have expiring futures, like these futures ETFs are built upon, you have to roll into a new contract once that expires, and there's historically been a premium, and that's paid for essentially in fees. So you're looking at about 10 to 12% fees for futures ETFs compared to actually holding the actual spot ETF itself. So there'd be a big improvement for the institutions there, and that should see a kind of new wave of institutional money coming in. If you look at the kind of futures ETFs right now, they've just underperformed Bitcoin. So year to date, the top Bitcoin futures ETF is ProShares, and year to date, their performance has been 45%. Compare that to Bitcoin, 75%. So we're nearly seeing about 30% underperformance there with futures ETFs. So no institution really that's worth their money is happy about investing in that futures ETF, whereas the spot ETF should see them kind of their interest peaked, I guess. So no, to go back to your original question, to me, they're responsible for two different sectors of the market. One is great for kind of retail adoption, and one should be really good for institutional adoption as well.
Conor, thank you very much for joining the show this morning. Happy Monday.
Thank you, guys. Thanks for having me.
That was Ethena's head of research and data, Conor Ryder. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-host, Lawrence Lewitton. Lawrence, thanks for keeping me honest.
Were you dishonest? Or
No, I'm just going back to that chart this morning. No. You just, double checking my numbers on the fly. I love it.
Oh, no, that's not that at all. I actually was just like, I'm rounding it up.
I appreciate it. We got to round it up. I appreciate it.
It's not a big deal.
All right. First Mover returns tomorrow morning at 9 a.m. Eastern Time. In the meantime, you can catch The Hash today at noon. You're watching CoinDesk TV.